The Federal Reserve announcing that Vice Chair Michael Barr is leading a review of the supervision and regulation of Silicon Valley Bank. The review will be made public on May 1st. Vice Chair Barr saying, quote, "We need to have humility and conduct a careful and thorough review of how we supervised and regulated this firm." Mr. Powell adding, quote, "The failure demands thorough, transparent, and a swift review." For more, let's go to Yahoo Finance contributor Kevin Cirilli live for us on Capitol Hill. Hello, Kevin. How we doing?
It's not just the Federal Reserve that's going to be looking into Silicon Valley Bank and what went wrong, what regulators knew, what they didn't know. It's also going to be members of Congress and the House Financial Services Committee. I'm joined by Congressman Bryan Steil, a Republican from Wisconsin, a member of the House Financial Services Committee. We're hearing the Fed's going to be investigating. I would take it that you want to hear from some of the bank executives about what went wrong.
There's going to need to be a full after-action report. Exactly what led us into this situation. Did the Fed act in the manner that they should have? And then big picture, Congress needs to address the gorilla in the room, and that's the fact that we're living under 40-year high inflation, and we need to dramatically change course here in Washington.
Well, let's talk about inflation, because there's been some chatter in the markets today and from analysts about whether or not Fed Chair Powell and the Fed is going to have to alter their inflation practices and their strategy moving forward. Do you think that Chairman Powell needs to adjust course?
Chairman Powell came before the House Financial Services Committee just last week, and he made it pretty clear that he's going to remain consistent in his policies to drive interest rates higher to try to tame inflation. The real driver of this whole problem is the fact that we're living under 40-year high inflation. I think it's reasonable to see the Fed maintain higher interest rates and continue moving them up. I know there's a lot of conversations that they're going to do otherwise. Ultimately, that's a decision for the Federal Reserve Board, but I think it's paramount here in Washington and at the Fed that we're addressing rising inflation.
But does what happened with Silicon Valley Bank, does that change the calculus at all for the Fed, or does it illustrate what happens with the Fed's monetary policies?
I don't know that it changes the calculus as much as it actually just makes it incredibly clear that the fact that we have 40-year high inflation is challenging not only to folks who are struggling to pay their bills and cover a grocery bill, but also it's impacting our financial institutions. And many of the people working in these financial institutions have never seen interest rates at this pace. And now we look back and we can clearly see a handful of banks were poorly managed to deal with this.
President Biden earlier today at the White House came out and said that Dodd-Frank rollbacks are what contributed to this, I'm paraphrasing, but what contributed to this situation with Silicon Valley Bank. Do you agree with that?
The president and many on the left who supported the reckless spending in Washington and anti-energy policies are looking for a scapegoat. But I do think ultimately it's pretty clear what got us in this position. It's high inflation. And the inflation was caused by excessive spending in Washington, by energy policies that refuse to unleash American energy, and labor policies where we still find far too many people who are on the sidelines that we need to help get back to work.
But when you look at Dodd-Frank in particular, and former President Trump having adjusted Dodd-Frank in 2018, rolling it back, launching criticism from the likes of Senator Elizabeth Warren, she's out with an op-ed today saying that banks need to have bolstered capital requirements right now, as opposed to trying to push to lobby them to be reduced. Is there any warrant to that argument that banks like Silicon Valley Bank should have had larger capital requirements in order to prevent some of the policies that we're seeing from Secretary Yellen to keep this from defaulting?
There's going to be a full after-action report as we're done with this. I don't think that I'm terribly surprised Elizabeth Warren is looking to find the blame other than reckless spending in Washington. The gorilla in the room is that we have rampant inflation. It was the inflation that really drove this. When you look at what was on the books, where the deposits were for these institutions, how do we get inflation under control? We have to unwind the policies that are actually supported by senators like Elizabeth Warren and President Joe Biden. We got to get spending under control in Washington. We got to unleash American energy. We got to right-size our labor policies. We got to work with the Fed to bring inflation down, because at the end of the day, inflation is what caused this.
There's been some debate about whether or not the action from the Fed, from Treasury, from FDIC, the action that they took, whether or not it was a bailout. Do you think that what the government did on Sunday evening was a bailout?
It appears at first blush that the Federal Reserve has the authority to take the action that they did. I don't think anybody likes the fact that the Federal Reserve had to step in the manner that they did. At the end of the day, we're going to have a full look back to determine was this the best action of the options that were available to the Fed to contain this from spreading further through the financial system and hurting more people who are reliant on these banks?
Well, that's the one thing that you know, is somewhat bipartisan, is this frustration back from 2008 that nobody went to jail, no bankers went to jail. President Biden earlier today said that these executives should be fired, but he stopped short of saying that they should go to jail. I mean, if there was criminal wrongdoing, do you think that these executives, I mean, what price should they have to pay?
There should be an absolute thorough and full review of these banks. I think the key here is now what exactly transpired. It's a little early to have the answers to that, but these are the questions that we're going to have to ask.
You and I were talking about, last question for you, Congressman, before we came on air, about the role that technology has played potentially in scaring some of the financial markets and spreading a lot of rumors, financial rumors, and just, you know, you're on the Capital Markets Subcommittee, and this is something that you look at quite closely. I mean, in the last 72 hours, to see what happened out in Silicon Valley with one of these banks, it's quite unreal to see how it's spread online.
You know, it's a year ago we had some of our first meme stocks being price being driven by social media. Now we see how banks can be impacted as that information spreads. I think it's one of the reasons we need to make sure that we're instilling confidence in our financial services industry right now to prevent this from spreading more broadly.
Congressman Bryan Steil, appreciate you coming on Yahoo. Thank you so much. And we'll toss it back to you guys in New York.
All right, great stuff. Thanks so much, Kevin. And of course, thanks to Congressman Steil as well.